Another big day of learning and earning opportunities come to an end. It's about that time of day again here, though. It's Thursday evening. It's March the 7th, 2019. My name is Joseph. And of course, this is your nightly newsletter. You know, I help traders earn consistent, reliable, dependable, predictable profits using a relatively simple three-step trading strategy that we execute together every morning in our trade room. But my plan tonight, my job tonight with you guys on this video is to identify the best of the best opportunities that we see setting up for tomorrow, Thursday's trading session. And I got crude oil, S&P, Nasdaq, gold, and euro on the docket here for this evening. I'm going to jump in here first over to the black gold, the Texas T, the crude oil futures. Got a range-bound market today on oil. Got a nice big bull bias to it, as you can see. Nice big bull bias into that range, right? Trading range tells me buy low, sell high. Bull bias, though, tells me look for those buys down below that trading range. And, of course, my goal for tomorrow is finding some opportunities here to buy that pullback, right, as we get that big drop below the low of that trading range. I'm also going to look for a possible breakout to the highs. If we do see a specific pattern here as we go higher, I will definitely be keeping my eyes open for a possible breakout going higher. We get some big news tomorrow morning. We'll talk about that in a moment. So we got some plans here for buying and selling. We'll be looking at that here on the crude here tonight. Over on the S&P here, S&P is also a range-bound market. I know it seems like a trending market right now, but you can see there is that, right, really narrow range that we spent a lot of the session kind of bouncing around into today. It's a range-bound market. Of course, range-bound markets tell us to buy low, sell high, use those failure patterns. We got that bearish momentum to it. And of course, that bear momentum tells me we can use the 1-2 failure. And then, of course, right, we can use that nested 1-2 back up here to go higher. So buyers are getting it in here on the way back higher right now. I'm expecting to see a rotation back up to retest the high. I've got a hidden channel you can see here set up here. I'd like to look for a sell right off the top of that hidden channel up inside that battle zone. But my big concern on the S&P is by the time we get up there, this is going to be a pretty bull market. I think we're going to turn pretty bullish here as we get back to that high. So I'm looking for two specific patterns here. One is going to be proof of a breakout. That should be a real easy pattern to look for. We'll talk about that in a second. But I'm also, of course, looking for a chance to sell off that high too. So I'm looking for both buy and sell sides right now. And of course, if we do get that next leg lower, we got potential for another buy going off that low. I'm going to put together the plan here on that S&P. Over on the Nasdaq, though, Nasdaq looks very similar to its older sister than the S&P, but quite different, though, in many ways. There's no range on this Nasdaq. Nasdaq, of course, had that big, strong move down. Anytime we see a strong move in one direction, we expect to see another leg. Well, you notice that second leg is also a very strong right leg lower, which means, well, you guess what? We're probably going to see another move lower here. We barely missed that big round number down there. And of course, that measured move is only a few points lower. So personally, I'd love to see us, right, try to go lower, and then I'm going to look for a buy going back up. That will take some finesse, obviously, buying off of that low, but I got a great pattern for you guys to learn on that one. And then, of course, if we do go higher, much like the S&P we talked about earlier, right, I've got a plan for a buy. I've also got a plan here for a sell up around here. So we'll talk about those in a moment here as well. Nasdaq, a little bit different than the S&P, but still very similar on the plan there. So we're going to break those down in a lot more detail here in tonight's video. Over on the gold here now, gold is a range-bound market. I, of course, mark this as a bullish momentum right now, basically because of this pendulum swing. The swing below the range oftentimes will kind of swing that market back up to the opposite side. We saw a good example of that on the S&P earlier today, or should I say on crude oil today. But the bottom line is that gives me that reason to think that we are bullish going into tomorrow morning's session. But of course, anything could happen, right? It's a range-bound market. I want to buy low, I want to sell high, and I want to keep my eyes on breakouts right now on the gold, because don't forget, tomorrow we've got some really big news to start our session off tomorrow morning. So gold could definitely be a breakout potential tomorrow. I'm going to break it all down on the gold here in just a few moments, so stay tuned on that for all you gold bugs. And then, boy, that Mario Draghi, he put a whooping on this euro today. Just got completely beat up and battered. I guess that's what happens when you pretty much tell the world that you're going to be continuing more buybacks, right? Pretty much more easing, more easy money. He makes it sound so simple, so easy. Just keep printing more money. And of course, that's not good for the value of the euro, right? The euro's not too happy to hear that more of his compadres are going to be out there in circulation. So not a big surprise. Euro, of course, loves to go from those big round numbers to big round numbers right now. We talked about that last night on the newsletter. But I'll tell you, though, we're obviously bearish. The big thing right now, though, is 1, 2, 3. I mean, you could say 4, 5. I've got this as 4 legs down. I'll tell you right now, anytime a market goes 4 or maybe 5 legs lower here, we can almost guarantee the following day is going to be a trading range. It's going to take a little bit more than just some profit taking to reverse this trend. We do have some news tomorrow morning, though, which might just be enough to shake this range out and run back higher. So not expecting it, but we'll definitely put the plan together if we do see that strong break higher. But more importantly, though, the pending range here tells me I want to sell it back down. I want to buy it back up. And of course, avoid trading around that big round number, because that big round number will be our big objective here as the magnet for tomorrow. I'm going to put that whole entire plan together here on the euro in just a few moments. Before we jump into those charts, though, I want to make sure, though, that you never miss another great video newsletter here. To do that, all you've got to do is hit up our blog here at sidewaysmarkets.com. I'll put all the links in the description of this YouTube video. And all I need from you is your name, your email address, and then hit that subscribe now button, and then check your inbox. Okay, when you subscribe to it, you got to make sure you check your inbox, because there's a welcome email in there. I need you to check that welcome email, because it's filled with all kinds of goodies, so you can get the most of our time together every evening on this nightly newsletter. So don't delay, pause the video, join our mailing list, confirm the welcome email. That way you never miss a beat. And please don't forget, I'll be with all you guys tomorrow morning in our trade, and we do every morning, Monday through Friday. But please don't forget, if you can't be there with me tomorrow morning, grab all those charts that we're using tomorrow morning. They're available right below the video tonight, right here on our blog. So if you can't join us in the trade room, right, next best thing is to grab all the charts that I'll be using tomorrow morning by scrolling down, right, and grabbing those charts below tonight's video. And then how about some questions? Questions, comments, concerns, any feedback, any constructive criticism? You know, I'm always trying to improve here. If you have any questions, any constructive criticism, any way you would like to see this newsletter get better, that's what the comment section's for. So drop me a comment below. Let me know what you love, what you hate, what you want to see more of, or what you want to see changed here on this nightly newsletter. I'm always listening to your feedback. And then please don't forget, I'm always here to help. If you have any questions, you can use that toll-free phone number. Usually that live support is online. I'll make sure to restart that server once I finish up the video. At any time, guys, call us toll-free, upper right-hand corner if you have any questions. My wife, Megan, and I are always here to answer that telephone. No robots here, no automated answering systems here, right? I promise you'll get all the good stuff from us here at our corporate headquarters in Los Angeles. All right, let's jump right in. Enough of the introduction here, JJ. We're not here for the chit-chat. We're here for the charts. Before we jump in, though, and take a look at those charts, though, I've got to first take a look at the schedule for tomorrow. Tomorrow, of course, is Friday, March the 8th. And, of course, we've been keeping this cheat sheet here all week. Been a lot of news here this week. Not so much anymore, but we had a lot of news this week. Tomorrow's Friday. What were the two big topics for tomorrow? One is that non-farm payroll report. That's at 8:30 tomorrow morning. The employment situation. The second big thing for tomorrow is the contract rollover. Now, we've been watching contract rollover on the E-minis, the S&P, the Nasdaq, the Dow, the Russell, right? Contract rollover is right around the corner. In fact, as I'm recording this right now, look at the S&P here right now. We're pretty much sharing volume right now on these two markets. You'll notice the 319 is still in control here. We've still got all the volume on the 319 contract. Once the 619 contract has more volume than the 319 contract, we'll make the switch over to that 619 contract. As you can see, as of right now, that volume is still higher. But I'll tell you right now, as of 3 a.m., 4 a.m., 6 a.m. tomorrow morning, that might be a very different story. So remember, this is not contract expiration. This is contract rollover. So if you don't do it tomorrow, it's probably not going to be the end of the world, right? No real harm done. The problem is if you try trading the wrong front month, it's not going to be very much volume and it won't be very good trading for you. The bottom line is keep your eyes on the volume tomorrow. I'm going to be analyzing the 319 contract tonight. And then, of course, as of next week, we come back to our newsletter. We'll most likely be on that 619 contract. So contract rollover tomorrow. Again, we're watching it right now. There's no guarantee yet. And we got that big news tomorrow with those non-farm payrolls. I want to talk more, though, about those non-farm payrolls because it's always a bit tricky for my job the night before because we get such a big news report tomorrow. In fact, you could say this is the granddaddy of all the news we get as professional traders. The most important thing about the non-farm payroll report is that a lot of times the markets have already priced in. They've already priced in the news, right? You might not recall this, but on Wednesday this week, we heard from the ADP employment report. The ADP employment report is notorious for being kind of the leading indicator, right, of that employment number on Friday. Now, you can't really do much with this, but what you can do is you can anticipate the fact that a lot of traders out there have read that report and they've already placed their bets. They've already placed their bets on what will likely happen, right, on Friday morning. Why is it important? Well, because what we're seeing right now has probably already priced in that news. So what does that mean for us tomorrow? Well, it means tomorrow that if we have, let's say, for example, tomorrow, right, let's say that news comes out within expectations. If it comes out within expectations, the market's already priced this stuff in. It's going to be pretty slow after that news comes out, right? But what if we see tomorrow that news comes out and surprises people? Right? The news that we saw on Wednesday doesn't match the news that we saw tomorrow morning, right? Like we saw last week. Right? Remember last week? Or sorry, no, last month, right? The month of March. No, this is the month of March. The month of February? Is it Friday yet? Can you tell? It's been a busy week here this week. But the bottom line, though, is we saw a good example of that, right? Last month, in the month of February, the first Friday of February, it came out way outside of expectations. And what happened? The market went bonkers, right? So it's very important. The moral of the story is it's very important tomorrow morning that you be very careful around this 8:30 news. Because when the news comes out, if it's within expectations, the market's already priced it in usually, and the market will likely sit and go nowhere for a while. So you want to give it 5 or 10 minutes, see what it wants to do, and then go from there. If the news comes outside, right? If the news comes out tomorrow morning, 8:30, and it's outside the market's expectations, well, guess what? Now you've got all those traders who are already in their positions, and now they're going to have to quickly maneuver them, execute plan B, C, D, and so forth. And what happens is the market really starts getting whippy. Okay, 5-10 minutes later, it should calm down. So the end result is whether we are very slow or very fast and whippy after that news comes out tomorrow, you really want to give it about 10 minutes, let it figure out what it wants to do, let the dust settle, and then go from there. Now, again, my job is very tough here tonight because I'm trying to anticipate tomorrow morning, but I'm staring down the barrel of that big news report, and that will affect the overnight markets. It will affect the pre-market tomorrow, and it will, of course, affect, right, what we see after that news comes out. So my job tonight is to give us my best effort And then, of course, tomorrow morning, we're going to sit tight, wait for that news to come out, and we'll trade the reaction. Now, tomorrow is a Friday morning, which typically means early in, early out. Got to have a good reason to be trading after 11 o'clock on a Friday morning. And then get some sleep tomorrow night. Because don't forget, this weekend, if you're here in the U.S., unless you're in one of those states that doesn't observe daylight savings, we got daylight savings beginning in the U.S., which means clocks will spring forward 1 hour on Saturday evening. Now, for many of us, this means we get a couple more hours of sunlight at the end of our day, right? I will definitely drink to that. However, we get an hour less of sleep on Saturday night, and if you're anything like me, usually your Saturday nights are spent catching up on sleep from a busy work week. So what I always tell my clients is get your rest the weekend of daylight savings time, because oftentimes you're not going to actually feel that loss of an hour until Tuesday into Wednesday. We'll talk more about that tomorrow or on Monday as we drag ourselves back to work on Monday morning. But be aware, if you're not in the U.S. or if you're not in, if you're in a state that doesn't observe, be aware it's not going to be Eastern Standard Time on Monday. It'll be Eastern Daylight Time, which means the normal 8 o'clock Eastern Time will actually now be 9 o'clock Eastern Time, right? It'll all be sprung forward, right? So the clocks go 1 hour forward. So make sure you adapt to that next week and get your rest this weekend, because I'm telling you right now, it's always a good idea to build up that rest before you lose an hour on Saturday night. All right, let's get back to the work here. Employment number tomorrow, 8:30 Eastern Time. And again, I'm going to do my best here tonight. I'll do my best tonight to really make sure we put this plan together. But be aware, I'm very much at the mercy of how these markets want to react, both ahead of and after that news that comes out tomorrow morning. Let's jump right in here. Starting off first here on the oil market. Let's clean this thing up a little bit here. First of all, 1 leg, 2 leg, 3 leg creates that measured move. Got that. Get rid of the logo. No trade zone. Battle zones are above and below, and we are looking good. Again, you can get copies of all these charts below the video tonight on our trading blog. Now, step 1, I always ask myself, what type of market conditions are we dealing with right now? Is it a range-bound market? Or is it a trending market? This is a range-bound market, right? We can easily see the market going sideways here. Moving average flattens out. I'm seeing higher lows. I'm seeing lower highs, right? It's quieted down here, and we're a range-bound market. Now, whenever I have a range-bound market, I always ask, what's our directional bias? Here we have a bias going higher here, right? It's very obvious, a bull bias. That bull bias tells me I want to buy at support below the low of that range, right? That's where the meat and potatoes will be. So buying below the low of that range sounds like a good idea. Could I find some levels of support down there, right? Are there any support levels that I could use down there to buy with? Well, if I take that trading range, I can take the size of that range, copy and paste it down. That creates a major level of support. Another leg lower, right? That creates another level of support, and that creates my buy zone down here. So it's a bull market into a trading range. I want to buy below the low of that range, and I've got an idea of where I want to get long. I can also see if I measure this leg off the high, that leg lower, well, looky there, it puts me right at the same spot. So we got symmetry, we've got range, very good spot there, nice buying area here. So now all I need to do is find a good entry pattern. So what are some easy entry patterns we can use here to buy off that low? Well, first of all, I'd like to see a nice strong move down. If I can see a strong move down, that should bring the moving average over. Now, of course, with that strength going lower, I would anticipate you're going to see some sellers trying to sell that pullback, right? The bears will think this is now a bear market. The problem is it's not a bear market. If it holds and goes lower, it becomes a bear market, but we're not there yet. So once I see those bears trying off the moving average, I now know I have a great chance to buy at support and do it right into an area where the sellers in the market are being forced to exit their positions. Now think about that for a moment. Bull market, I'm buying at support, but I'm doing so in a way that forces the sellers while they're getting out to help my trade run higher. Think about how effective that is. The easiest money you'll ever make as a trader, easiest money you'll ever make is going to be when you're getting in, going with the momentum, and the counter trend traders are getting out. Because when you get into a trade, you do it very precisely. But when you get out of a trade, does anybody really care? No, get me out, right? When the bears realize they're wrong, what are they going to do? They're going to hit their sell buttons. They're going to hit their close button. It's going to be a stop loss. None of those are precision exits, right? A stop loss is a market if touched, right? Exit, hit the close button. It's basically a market order. Get me out, which means that slingshots that price going higher. Now, once we get that market running higher, we call these failure patterns, by the way. We run lower. The bears try to sell it. Failure pattern going back up. Easy, easy pattern. Well, now I don't want to buy high here anymore, right? I don't want to buy high. I want to buy low. So the next pattern is going to be I wait for a pullback. I wait for that pullback pattern now, and I can pull back to usually the same basic spot where we got long the first time. Moving average comes over, and we're good to go there. Those are two easy patterns that I'm looking for as we pull back here for tomorrow. Again, one's called the failure pattern, and the other is called a pullback pattern. Now, that's if the market goes lower. What if the market runs higher here? It's a bull market. What else could I do to buy high here right now? Well, first of all, I need to know that I've got that measured move, right? So that measured move, that creates, right? That measured move creates that target up overhead, 57.25. So that's my objective. The first thing I need is I got to see some strength. If I can see some strength running here now to get long, I can look for basically the sellers to get into trouble. You know, I would imagine that the sellers will look at this as a range and they'll try to sell off the high of the range. The problem is it's not a bear market. It's a bull market. So what I like to do is once I see that strong move up, knowing where my target is, I want to make sure I look for those bears to try once, bears to try twice, then I can look for the buy going right into their stop losses. You know, think of it this way. The sellers will try once. If they fail, I'm sure you're going to see a lot more bears try it again and say, no, that was lucky. Let me try it again, right? They'll try it again. Most human beings will try things twice. The markets will usually try things twice as well until they give up. That is what I call a two-try failure pattern, right? Bears try once, bears try twice. Okay, so those are two buy orders now that we can use here. Okay, how about the sell side now? Okay, we know what the buys look like. What does sell look like? Let's go higher first. Okay, if we go higher here, how do I sell this market? Because I just talked about how I'm looking to buy that market with the right pattern, of course. But if we go higher here, right, what would be a valid pattern to sell it? I'm going to use the same basic two-try failure pattern, but flip it against them. Now, as that market goes higher, I'll let the buyers try once to buy the pullback. Now, if the buyers fail on that first pullback to go higher, they're probably not going to give up. They're going to probably try again. See where I'm going with this, right? Let them try once, let them try twice, and then again, I'll sell it back down. So once we see those buyers struggling and failing, and again, you can see the slight difference between those two types of patterns. One is a buy for a breakout. One is a sell to fade the breakout. Now, what about going lower? Right? How do we turn bearish? Because remember, right, I've got that buy zone down here. If we go lower, I want to go back into that range. So what's a different option here? Well, here's an option for us. One is going to be if we see a strong move down, let those buyers try once, let those buyers try twice, and sell into their stops, right? Once and twice. Remember, to be a buyer down here, it's strong move down. Sellers, of course, come into the moving average, and we're buying off their failure, right? Well, if we go one leg lower, two legs lower, and see those strong move down, buyers try once, strong move down, buyers try twice. At that point, how many times do you think those buyers are going to keep trying? Yeah, they're going to probably give up. So if I see a strong leg down, I see buyers trying. That's when I know now I can sell into those exits of those buyers. And where's my target? Down to that low at 55, right, 42. Relatively easy strategy here on the crude. Like I mentioned earlier, though, range-bound environment, buy low, sell high, avoid that middle. And remember, tomorrow morning, 8:30 Eastern time, it's not going to be a walk in the park leading up to it. So be careful. And of course, batten down the hatches there around that 8:30 news. Over now to the E-mini. Again, we're watching rollover for tomorrow on the E-minis. The E-minis, of course, are another market that will likely get a little bit rough around the edges here ahead of that news report tomorrow morning. First of all, what are my market conditions? Is it a trend or is it a range? Follow the bouncing ball. We spent we collapsed here earlier and then went sideways into that range, right? Now look at these levels. Resistance overhead, support below. Okay, this is the reason why we love ranges. I love range-bound markets because range-bound markets, whenever I have a range, right, I can take the size of that range, find resistance overhead, find support below. And you can see those levels of support and resistance are working very, very well, both buy and sell side. And you can see the same patterns we talked about earlier, right, on the oil. Strong move down, sell above the high, one try, two try, back down in. Right? That's the same basic pattern we just talked about, but flip it in the opposite direction. Then, of course, right, because it's a bear market down, you've got that strong move lower. The bears try once, the bears try twice. Bingo. Counter trend using that two-try failure. These are the same patterns I just talked about on the oil, except different direction. Right? This is a bear market to a range. So, of course, you're selling high. I can be aggressive selling high. I want to be a little more conservative buying off that low. Okay, because it's a bear market, we can be aggressive selling, right? Be more conservative being a buyer. That's why they're different patterns. Okay, now the big challenge right now though is I don't want to sell, I don't want to trade the middle of this range. It's a range-bound market, which says buy low, sell high, right? Range-bound market, buy low, sell high, avoid the middle. I'm sitting right in the middle of this trading range right now. I don't want to touch this trading range here. Okay, not my idea of a good spot, right? To be anything. Okay, if you're not in off of this, if you're not in off of that two-try failure earlier, it's too late now. So we have a bear market in our hands here, though. So I think you're going to see a lot of sellers looking to sell up around the high of this range. The problem is that if we run higher here, this is probably going to be a pretty bull market at that point, right? If we get that big rotation back here, there's potential now we make this run all the way back up to where we came from. Remember, tomorrow morning, we get some big news on the schedule. We also, though, have a big strong move down. And anytime we see a strong move down, we oftentimes get a second leg. And so that second leg now leaves me open for another chance to buy this market, right? Or we may end up running down to that measured move. So there are a lot of what ifs right now on this chart, but let's put them all together. Let's take a look at this. Let's clear this stuff off here, right? That way we got everything covered there. Keep it as clean as we can get it. Okay, first of all, it's a bear market. So how could I sell this thing? Well, first of all, as we go higher here, right? I've got this rising support trend line. That rising support trend line sets up wonderfully now for what we call a two-legged pullback. I've already got the one. I've got the two. I can get back over it and use that trend line, right, as a chance to sell. This is an adaptation to our 1-2 try failure pattern. Again, I've got a range top. I have a hidden channel. We're bearish. I want to sell at resistance. But that may not even happen, right? That may not even happen, right? We may get, because that's pretty much the only chance we have right now, right, to be a seller on this. If I want to be a buyer on this, same thing goes. We may get this 1-2 jump, and we may never even get enough to get below it, right? We may never even get enough of a pullback there, and we may end up seeing that 1, that 2, and that failure. This was the same basic pattern we talked about last night on the newsletter for crude oil. If we get this thing to really whip higher here, because you've got that rising support trend line there, that really keeps a lot of sellers away from this and really allows me now, with the right pattern, 1, 2, to buy right into those seller stop losses. So to be a seller right now, I've really got to be careful, right? I don't want to sell here. I don't want to sell the low of that range. To be a seller right now, I've got to get back above, use it, and go. To be a buyer right now is a whole lot easier. right? Being a buyer right now, I could easily now jump, one try, two try, keep going. Again, you're literally waiting for one, you're waiting for two, and you're buying right into those stops. Target, of course, is back to that high. But I'll tell you what I really hope we get is, I hope we get one more leg. Because anytime we see a strong move in one direction, we oftentimes see a second leg lower. If we get that second leg lower, now we have the potential to really wrap this thing up as it goes higher. If we do get that second leg lower, now I look for the same basic pattern here. Second leg lower, look for that one, look for that two, and up we go from there. Let those bears try to sell the pullback once. If they fail, they're probably not going to give up the first time. Let them try again, and then we can look for that buy going higher from there. All right, guys? Now, I should also mention, too, if we do make another run lower and we get down to that measured move, I would expect that will probably result in a range down here. It'll probably end up a lot like Euro, right? So if we do end up making that next leg lower and this thing just runs, keep your eyes open down here for a trading range. And if we do see a trading range, find that range expansion and then use that two try failure pattern, 1 and 2, right? And sell it right back down again, right? Two try failure, 1 for the buyers, 2 for the buyers, and we'll sell it right back down again. Boy, we have covered so much in this video in quite a short period of time here. We've talked about counter trend trades, with trend trades. We've talked about failures and breakouts and everything in between. I want to keep going, but I've got so much more I want to share with you guys. And to make sure I give you a deeper dive into the entire strategy, I wanted to encourage you to join our free trading class. If you're relatively new here with us on the newsletter and you see value, but you want more, grab that free course in the upper right-hand corner. I'll also put a big red button right below that video tonight on our blog. Grab the course. It's linked up below the video. It's in the upper right-hand corner of this video on YouTube. Grab the free course. Learn about the strategy. I call it the 3-step trading strategy. Learn about it. I'll also send you hundreds of examples of real patterns we see every morning in our trade room. Everybody loves the free course. You will too, right? Trust me, grab that free course in the upper right-hand corner. So now we know what the buy side looks like, what the sell side looks like. I even know what I'm looking for if the market tumbles lower here, right down to that measured move. Let's keep going. Over on the Nasdaq right now, Nasdaq is going to be very similar here. Okay, Nasdaq, of course, has that strong move down. Strong leg in one direction tells me look for a second leg. Well, look at this. The second leg's huge. It's a huge second leg there, right? Second leg, of course, tells me very strong move, expecting to see another attempt. Got that measured move down here. You can already kind of see where I'm going to go with this, right? You can already see where I'm trying to go with this. So we know we're bearish, right? We know we're bearish. I want to be a seller at resistance. So where can I find some resistance? Well, that's kind of the challenge right now. On the S&P, we had a range back here. But you know, there's really no range there. I don't see the range there. I just don't see it, right? I've got double bottoms, but I don't see double tops, right? Look back at the S&P. The S&P clearly had double top, double bottoms, right? Down, up, right? That's a range right there. That range gives us great market context because it tells us exactly where those levels of resistance are. We don't have that luxury in the Nasdaq. Okay, difficult to tell what that means for us tomorrow, right? It's difficult to tell if that's a good thing or a bad thing, but I don't see that same context here in the Nasdaq. Maybe a tiny range right there. Maybe that's it. But if that's the range, though, then we get a big old pendulum swing now coming in the opposite direction. And, well, we'll put the plan together for that here in just a few moments. So now, we know we get a bear market. I'm trying to find a level of resistance right now, and I don't have that range to lean on like I do on the S&P. So what I'll do is I'll mark up those lows. Okay, that creates support, but I'll use that support as resistance here now overhead. We call these hidden channels, right? Now that becomes a definite level of resistance that I could look to sell off of. Okay, hold that thought for a second. I also have another level of resistance, which I think is probably more effective here tomorrow, because you can see that trend line coming down. This creates a bit of a wedge here. Now, that's not that big of a deal. What's really important, though, is you've got a well-defined trend line there. Everyone's going to see that trend line. I would expect to see sellers, right, trying to sell into it. So we know that's where the bears are looking for. They're looking for it up here. My biggest problem, though, is it's such a big move higher, right? See, this happens all the time. When you see a relatively steep, narrow channel, there's no room for the buyers to participate. But when you put a really wide channel on here now, oh yeah, those buyers can run this thing. The buyers can take control of this as they rotate back and forth. It's one of the key differences we talk about in our intermediate classes regarding channels. Channels tell us a lot more than direction, support, and resistance. The width of this channel tells me that if we make it all the way back to this high right now, this is probably going to be a bull market. So I really got to be careful, and that opens the door for a buying opportunity here. So what's the plan on that? First of all, how do we sell this market? And then how do we buy this market? It's a bear market. How do we sell it? First of all, as we go higher, you can already see the groundwork here for this trend line. I've got to get below it. I've got to use it and go from there. It's not going to be very easy to be a seller right now if we don't get some sort of range first. Okay, so that's something to consider here on the Nasdaq, right? That's my sell, getting underneath that trend line and using it as resistance. Another way to sell would be if we run lower, right? If we run lower and we start going sideways here, right? If we run lower and we start going sideways, if we get a range down here on top of this measured move, like I mentioned on the S&P, well, then we can look for the 1, the 2, and the failure. Let the buyers try once, let the buyers try twice, and we're selling into their failure. We call these 2-try failure patterns. And again, as I mentioned earlier, you can learn all about these patterns by grabbing that free course or downloading it below the video tonight on the blog, right? The free course is very, very easy. Everybody loves it. It'll teach you a whole lot more about the way we trade every day in our trade room. Okay, so those are 2 sell patterns that I see here, right, going lower. One is going to be going up first, coming up and using that trend line, right? Just like this one, right? We go up, we get under, and we use it down, right? Same basic idea. We go up, we get under, and we send it lower. Okay, same basic pattern over and over again. Or we go sideways here, right? Maybe we sit right here and go sideways. We go sideways there, we find resistance, right? We look for the 1, the 2, sell back down again from there, right? You're selling that second try. Okay, there's 2 sell scenarios there. Now, what about being a buyer here? There's actually a really good opportunity to be a buyer right now. I know it sounds crazy. It is crazy, right, with the right pattern. But there are 2 basic scenarios. One is going to be the run higher. The other one will be the bounce off that low. Okay? That measured move, for example, is a major objective right now. What I'd like to see is those sellers try to get down to it, struggle to get through that big round number, and get a kickback. 1, 2, back up we go. Let the bears try once, let the bears try twice, right? Wait for that strong move down. That strong move down will complete the mission of big leg, second leg lower. Then we can look for the 1, the 2. The bears are trying to sell the pullback. They fail, and we buy into their stops. That's one way to buy this market. Another way to buy the market would be if we see a jump, right? We see a jump. Now look back here. 1 try. 2 try. If that would have failed, that would have been your buy right there. You can see the difference there, right? So we go higher here, big jump up, let the bears try once. Remember, they've got this trend line in their way. It's going to make it very difficult for those sellers to get serious about this. Let those bears try once, let them try twice, right? And we look to buy into those stops, right? We're buying right into those stops as we go higher now. Now, where would my target be from there? Target is back up to retest those highs. All right, guys? So relatively easy patterns. Again, tomorrow morning, 8:30 Eastern time. Make sure you're there with us. Next up, over on the gold here. Over on the gold, the yellow metal. Now, I got to warn you here. Are you listening? Are you paying attention? Okay, tomorrow, Non-Farm Friday. Okay, first Friday of the month. Well, technically second Friday of the month, but last Friday was the first day of the month. The bottom line is we got big news tomorrow. Okay, there is going to be a hurricane brewing for gold. Out of all the markets that get affected by non-farm payrolls, the big daddy, right, the Hefe, is gold. Non-farm payrolls will do damage to gold tomorrow. Gold will be relatively choppy, slippery. We may see a very nice breakout opportunity on gold, but I have no idea how this market will react here tomorrow morning. So right now, you can notice, right, the gold is basically curled up in the fetal position right now ahead of this news report tomorrow. This is not a coincidence. Everybody knows gold tends to be really nutty around that non-farm payroll report because it has so much impact. Its tentacles impact everything in these financial markets. So the most important thing right now is wait patiently. Be very careful overnight. I'm looking to buy low. It's a range-bound market. I'm going to buy low. We're going to sell high and stay away from the middle, right? I want nothing to do with the middle of this range right now and be very careful tomorrow on this gold. Now, you'll notice here I've got a measured move. That measured move, of course, puts overhead resistance in. Let's get those off of there. Clean up this chart a little bit here so you can get a little more intimate with this price action. Again, first things first, I have a trading range. Take that trading range, copy and paste it down, copy and paste it down. That creates support. Then take that same calculation, paste it up, that creates resistance. Okay, at this point, right, there's a slight bullish tone to it because you'll notice the market went lower before it went higher. What oftentimes happens is the pendulum will swing down and then swing right back up, right? Pendulum swings down and then right back up again. So that pendulum swing target, you'll notice, is conveniently right around that same spot as that measured move. So excellent levels of resistance waiting overhead, nice easy levels of support waiting below. Buy low, sell high. Buy low, sell high. Stay away from the middle. Now to do that, to buy low and to sell high, we use a very specific type of pattern, which is called the two-try failure pattern. What we'll do is we'll look for that pattern in a faster time frame. This is a 2,000 tick chart. In the trade room, I like to use either a 610 or a 377 tick on the gold. But we'll talk more about that in our beginner classes, which cover all the chart setup, right, for all of our clients. Now, going into the plan here, let's say first of all, we see the market run lower, right? Market runs lower. Sellers think it's a breakout. They sell off the moving average. Once I see those sellers trying to sell off that moving average, now I know where their stops are. I know this is not a very reliable trade to trade a breakout. I'll look to buy now right into those stops. It'll be just like this pattern you see back here, right? Strong move down. The bears, of course, are foolishly trading a breakout. They try to sell off the moving average, and what happens? Price goes right back up into the range. That pattern happens over and over and over again, right? So strong move down. Moving average comes over. The sellers think it's a breakout. They sell off the moving average. We get that failure. Now that failure, of course, is just the first taste of that move higher. Okay? A lot of times, sellers who got stopped out there didn't take their full position off. And they'll wait for the price to pull back to exit the full position. It's a way to save capital. That's our second opportunity. Now we have the breakout pullback. As those sellers finally bite the bullet there and take their lump, we get that market to rally higher again. You can see it happening right here. 1, 2, up, back, and go. Right? Patterns happen all the time. Same pattern. Right? Now, obviously, they'll be a little bit different every time, and that's why our trade room is so important, because with my trade room, you'll come in, we'll do it together. That way, no matter what type of, funny looking pattern it is, we'll be able to make sure we trade it correctly together. That way you're not alone out there doing it alone. Okay, now, we also may see, for example, let's say we see a real strong break higher. Sometimes the markets get really, really strong. Now, what would a breakout look like? How could I trade a breakout, or how could I sell it back into the range? I want to kind of paint a picture here. If I get a relatively subtle move out, I can get a 1, a 2, and buy it back in. But let's say this thing really tears lower here. If it really tears lower here now, that momentum is so strong, I want to wait for the sellers now to try once And they're probably not going to give up after one try. They're going to probably try it again. If I can see those sellers trying twice now, again, after a strong move, we've got to respect that momentum. They're going to try to do it again. I've got to let those bears try once, try twice, before I now go looking to be a buyer, going back up into that trading range. Now take that same idea now and go higher here, right? As I go higher here now, again, if I get just your typical 1, 2, I can look for that sell now back into that range. But if this thing just takes off, right? If it runs, at that point now, I've got two options really. To be a seller, I'll look for a 1, a 2, because that momentum is so strong at that point. The buyers aren't going to give up after one try. No, right? They'll buy the 382, and then they'll buy the 50% as well. So I want to let those buyers try the 382, try the 50%, then I'll sell into their stops. Then we get short off that high. When momentum really picks up, we've got to respect that momentum. Remember, anytime we see a strong move in one direction, we typically see that second leg. So because we're expecting that second leg, right, we know we've got to be careful selling it back down in. Now that also brings me out to another idea here. What if we do get that strong move up, we're expecting that second leg, what would be a way to participate in that? Well, now, of course, we use that 2 try in the opposite direction. Let the bears try once, let the bears try twice, and we look for that second leg from there, right? Once, twice. Now, just a word of caution. Sorry about that. Keep hitting the wrong button there. A word of caution. A lot of times, though, when you see these runs up, you'll get these little tiny guys. That's not what I'm talking about. It will be very obvious. You'll see the bears clearly come in. They'll try once. It'll go higher. You'll see them clearly try again. Okay, we call this separation. It needs to be obvious. It needs to be very clear to us. Those sellers are trying once, they're trying twice, then we start looking for that buy going higher. Okay, another pattern to look for, I keep hitting the same one, right? Another pattern to look for is a 1, 2, 3 run. If I see a 1, 2, 3 run, now I have a channel. It's definitely a breakout. I can now mark up that channel now, and I can look for that entry now off of that channel. Same basic idea. 1 try, 2 try, buying back up. So if we blast off that first try, right? Strong move up, 1 try, 2 try, up from there. Or strong move, pull back, blast. Okay, that's a bull market now. Find that new channel. Find that new channel and use that channel low for your 1, 2, and go. So some very nice patterns. All we need right now is to get the heck out of this range. Stay away from the middle. We're trying to buy those lows going back up. We're trying to sell those highs. But at the same time, though, we're looking for the possible breakout if we get the right pattern in either direction. 8:30 Eastern time is that big news tomorrow morning. Let's keep rolling. Over on the euro right now. Euro here, looking hot and heavy here, down to that 12,000 big round number. What type of market condition are we dealing with right now? It's a trending day. It's not a range-bound day, right? Let me saw on the oil, on the gold. It's not a range. It's a trend. But there's some really big clues on this chart that tell me we might be in store for a range. We got 1, 2, 3, 4. You might even call this 5 legs. 1, 2, 3, 4. Now, one of the many rules that we talk about in our trade room is don't chase the market lower, especially when you start seeing a market go 4, 5 legs down. Typically speaking, when a market goes 4 or 5 legs down, the following day is probably going to be a trading range. So expect to see a range down here. At this point, I'm very much guessing. I couldn't tell you where the range is. This is very much a guess. So let's assume for a moment here we get that trading range to form. Okay, there'll be a bear bias to it. If we have that trading range, this channel, by the way, is almost useless. It really is. You can almost get rid of it. It's not about the channel right now, because that channel, if I draw that channel down, it's not going to give me enough of a bounce there's no incentive there, right? That's not a very big reward. Nobody in their right mind would chase after it that far, right? So please don't try to sell the high of that channel. That channel was really just a kind of a placeholder there. As you can see, there was a channel there, but do not try selling that channel high. It will likely be a failure here. Now, we know tomorrow morning we have big news at 8:30. That big news affects gold. It will also affect the euro. Remember, the news tomorrow has an impact on monetary policy, the U.S. dollar, and that will have a big impact, right? Kind of a ripple effect into gold, into currencies, and then, of course, into the commodities, the index futures, et cetera, et cetera. Euro is another one of those markets that we do expect to see quite a bit of sloppiness tomorrow, right, around that news report. So just be aware of that. Okay, we may not get a very pretty price action series tomorrow on the euro. Strong move down into a trading range. Now, again, if I had more information right now, I would give it to you. I can take the size of that range, copy and paste it up, create resistance. Take the size of that range, copy and paste it down, create support. Again, we'll know more about that in a few hours, most likely. Okay, find my support, find my level of resistance. What do we do with this? Well, first of all, let's scroll forward a little bit here. Let's zoom in. Get a better idea here for it. If this is my range now, okay, a couple options here. First option would be we go higher, right? We're going sideways here inside of a range. We go higher. Let those buyers try it once. Let those buyers try twice, and we'll sell it back down again. Buyers try once. Buyers try twice. 2 try failure. Again, you can learn all about these patterns inside that free trading class I mentioned earlier. Okay, that's the sell side there. Okay, sell side is relatively easy. What if we get a big strong break higher, right? What if it rips higher here? What if it really rips higher here? Then what? If that momentum gets really bullish, now we have to look for them to try twice, right? If that momentum gets really strong, the buyers aren't going to give up after 1 try. They'll try it again. Wait for that 2 try and fade it back there. Okay, so 2 different scenarios, same basic idea. One, of course, adjusts to more bullish momentum. Okay, that's the sell side here. How about the buy side? The buy side here is actually pretty interesting because we made such a big move down. I would imagine, much like the S&P kicked back today, if we try going lower here, we might see a chance here to kick back higher here. So again, I'm really waiting right now to see, do we get that range? If we get the range now, I can mark up that range expansion as a key level of support. So now what I can do is I can look for the overshoot of that range and then use that nested 2 try, 1, 2, and buy it back up again. I understand that we're bearish, but if it goes into a range like this, that signals momentum is stalled. If we try to break below that momentum range, what oftentimes happens is if they can't keep it going lower, it's going to snap right back in. Because any seller who was still holding on to positions, once they see it fail, they're going to get out. And that market will snap back higher. So that's an easy way to think about buying this market tomorrow. Again, though, make sure you get the range first. Okay, I don't condone buying a bear market just because it's not going lower anymore. Okay, if we get a range, then we look for that buy going back up. Now, it's also a good idea here, if we go higher here, right, we may see this thing, again, it's going to take a lot tomorrow morning to reverse this market because it's such a bear market right now. But tomorrow's Non-Farm Friday. If there's any day of the week that can break this trend, it's tomorrow, right? Plus, all this move down today was off Draghi. Talk about, QE, right, and throwing more money at it, printing more money. So I could easily see how someone tomorrow morning could reverse a lot of this movement. I'm not predicting it right now, but I'm open-minded to it. What that will take, though, is a very strong move higher. Got to see a real strong move up. If we get that strong move higher now, expecting to see some sellers up here, what do we want? Let those bears try once. No, not yet. Twice. Remember, the bears will try once here. If they fail, there's probably a lot more bears where that came from. They'll try a second time. Once we see those sellers try twice, now we know where stops are, and we're buying right into those stops. Another pattern I'm watching. Same one, same problem. Another pattern I'm watching here. Again, we go into a range, right? 1, 2, 3, big blast higher. Mark up that new channel. That becomes now your 2-try failure. 1, 2, buying it back up from there. Okay, hopefully it's that easy. It may not be. Now, maybe I'm wrong, right? Maybe I'm wrong. Maybe there's no range tomorrow, right? Maybe it gives the flag pattern. Maybe we start grinding higher. Could easily be a flag. Okay, flag patterns. 2 basic setups. One is the 2-try failure. 1, 2, go. Same basic idea. Strong move up. Bears try once. Bears try twice. Jackpot. Okay, that's a relatively aggressive buy. But again, if we see it set the table, that strong move up, you're probably good to go. Another option would be a sell, which of course is we get below it. Trend line comes in. Again, we start channeling higher. It's not a bull market, it's a little bear market. We get below it and use it as resistance. Those are the 2 setups to look for when it comes to a flag pattern. All right, guys? If we do get that sell, where's the target? Back down to retest that low. And I'll tell you right now, if it turns into a flag, it'll probably end up into a range by the end of the session. Right? It probably will end up into a range by the time we're done. All right, guys? A lot of great scenarios here we're watching here. And I am just scratching the surface on this video tonight. Don't forget, guys, we get together every morning in our trade room and we execute the strategy together. Right? So stop doing this on your own. Get a coach. Grab the trade room link in our member section, right, and get started. Our advanced membership package includes all access to our trading courses, our trading plan, all the tools, and of course our highly coveted, right, morning trade room. I've got a free pass for the trade room. Grab that free trial right in the homepage of schooloftrade.com and learn more about what it means to be a client. That free trial, of course, includes our free trading classes, right? Our free access pass to our trade room and a whole deeper dive into the same trading strategy that we teach and trade together every morning in our trade room. Any questions? Pick up the phone, call that toll-free phone number, use that live support tool on the right-hand side of the website. And like I mentioned before, right? Like I mentioned before, get some rest this weekend. Get some rest this weekend because you got that daylight savings time shift right here on Saturday evening. All right, guys, wrapping up here for now. Thank you so much for being here. Be careful tomorrow morning before and after that news. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.